Ladies and gentlemen, whilst I don't post videos very often, what I do try to do when I do post is bring something completely different to the table that you won't see anywhere else, and today's trading video does exactly that. We are going to do some live trading analysis where you will see me make around $2,000 in a very short space of time, something anyone can do, but that will be a very small part of today's order flow video. There seems to be a lot of focus from retail traders on the end result. You know, how much money can I make and how quickly or easily can I do it? But what I have found from working for many years as a professional in some of the biggest banks is that the end result is one of the least important factors in being successful in trading. Much more important is the build up, the preparation and understanding of the trading environment before you execute your trade. Things I see very few retail traders look at because they are typically focusing on all the wrong things out of desperation for that end result. So what better time as we head into 2024 to start doing things completely differently to the retail trading crowd? So let's first set the scene in terms of the current trading environment before we finish off with that live order flow trade analysis. So as mentioned there at the start of the video, we're going to be setting the scene. Don't forget, we are going to be looking at this live trade and some amazing order flow stuff to come, but very important, we think a little bit differently to the crowd if we want to see different results. It makes sense. And that sometimes means getting out the comfort zone. You know, you used to seeing your charts, got to get a little bit away from that, not for more than a few minutes. We're going to do that together. And what better way to do that than by looking at the biggest event of the month that just occurred, the December FOMC, huge event, biggest event of the month. We're going to look at that together right now and maybe do it in a slightly different way to what you're used to. And then we'll get into the trading element, because the point is the meeting had a long lasting effect well after the actual announcement, and that impacted on our trade. So we've got to make sure that we're aware of those long-lasting effects because, like I said at the start, I hinted at, a lot of people won't be thinking about those things. So if you're not, here's your opportunity to do that. We'll do it together. So obviously the Fed did stay on hold at 5.5% in December. Now you may have seen this before or not. It's the FOMC projections for where they think the terminal rate will be at the end of a particular year. So 2023, 2024, and I would say probably not worth looking out too far because obviously, you know, this will change quite dramatically, so the market won't pay huge attention to that. They're going to pay attention to probably the next 12 months, so we can do that together. So they stayed on hold at 5.5%. However, they changed the projection slightly, so they slightly dropped this down and they're now expecting 3 rate cuts, so down to about 4.75%, right? Because we're at 5.5, so 3 times 0.25, 0.75. So 5.5 down to 4.75. What's interesting though is the market is even more aggressive. You know, the market is pricing in, I believe, 5 rate cuts down to 4.25. Okay, and we're going to talk about that in a second. But essentially, the Fed is now slowly starting to kind of come around to openly acknowledging that we've probably hit the peak in rates, okay? And the reaction was extremely aggressive from the market in the sense that we saw markets really rally, right? We saw equities rally. We even saw FX rally a lot. You maybe a Forex trader, GBP USD, I believe, went up 2 handles. So we saw pretty much every market rallying off the back of that. And we also saw bond yields collapse around 25 basis points. So a big rally in the bond market as well. So very important to know that this is having a bullish impact, okay? Because it's going to impact how we approach the market for several days. Like I said, we're starting to think a little bit differently to everyone else, which puts us at a big advantage. Just a couple more things we're going to look at before we move into the live trade. So first thing is very important, of course, the statement. We'll spend no more than 30 seconds on this. It is unbelievable. 1 3-letter word has triggered the market rally along with the dot plot changes, and it's this any. So previously they said in determining the extent of additional policy firming, i.e. rate hikes, they're now saying in determining the extent of any. So they're kind of opening up to the possibility that there won't be any more rate hikes, right? So that's why I said the ceiling's in place now for rate hikes. So we'll skip over that quite quickly because I understand a lot of you won't necessarily be used to reading that, but it's something I would suggest you familiarize yourself with. But that's enough for now. You can see very small changes, how impactful they can be on the market. Again, very bullish, that word change. And I do suggest, this is one of the final slides and then we're going to get into the live trade, that rather than just reading news or even watching a video like this where I'm telling you something, double check everything. You know, I don't see enough people double checking, fact checking. So if you were looking at this, you would want to see, you know, is the market justified in its bullish stance, right? In terms of the backdrop. Now, what is the backdrop? Why has the Fed now suddenly become open to cutting rates? Well, if we look at the underlying data, and I'm only going to look at two things, right? Inflation, two things, let's be honest, if we really get into the nuts and bolts of it, inflation and the jobs market, you know. So my point is this, and literally will take me 1 minute and then we'll get into the trade, is do you see that even though we're looking at things that may be outside your comfort zone, we're not going crazy on it. You don't need to go crazy. Keep it simple, but do enough extra that you're doing more than what everyone else around you is doing, but not so much that it ends up bogging you down, right? You've got to have a good balance. So we're learning is how much economic data is released in a week or a month, right? Tens, if not hundreds of data points. We're only looking at two, but the main two, you know, that probably make up around 90% of the Fed's decision making. So inflation and jobs. And again, won't go into a lot of detail, but you can see inflation is heading in the right direction. It's exactly where the Fed wants it to go, towards its kind of unspoken 2% target. We're almost there if we strip out shelter. But if we look at the main two sort of core and headline numbers that you're used to seeing on places like Forex Factory and so on, we're still heading in the right direction. We're slightly away from the target, but we're heading in the right direction, and aggressively so. And then you can also see the jobs market is starting to soften, but is positive. Okay, and that is a good sign that the Fed is comfortable not being so aggressive with the interest rates. And I say that because obviously when the job market is very strong, people demand high wages, that causes inflation. Now with the job market softening, it can help bring wage growth down, which can help inflation. All right, so we won't get into the details of that. I've kept it kind of to the point there, but the point is the moves are justified. And that's important, because if the market is very bullish, but it's not justified, well, then you've got to question if, you know, it's the right thing following that initial sentiment. But given the data justified the move, I think it is. So, you know, more than likely we will be bullish going into the session, you know, the next day after the data, which we were, and you're going to see that. And then just very finally, I think what is interesting going into next year, because this is something we should always be thinking about, you know, what's the landscape a little bit further ahead? The market is pricing in 5 rate cuts, which I think I mentioned before. And the Fed is actually pricing in 3. Okay, so let me just get rid of this. Sorry. It's an annoying little thing that just popped up. The Fed is actually pricing in 3, okay? And even then, they're kind of hesitant on 3. It's more like 2.5. So I think there'll be a little bit of a tug of war between 5 and 3. And depending on, you know, the next several meetings, and also the market is expecting the Fed to start cutting rates as early as March, I believe. I don't think the Fed's going to do that. So we may see a little bit of a pullback when it doesn't work out that way early next year. So, you know, expect a little bit of volatility going in as these numbers change a lot. So something you should be keeping out for. Said enough, let's get into the live trade. Okay, so you can see the market is moving here. It is my live account, okay, as always. All right, so it looks quite exciting, doesn't it? But we're actually going to pause it just for 1 moment because it is important. I'll just explain a few things before we get back into it. As mentioned, it is an actual trade I took, okay, in the live market. So you're going to see the market move as I watched it happen in real time. But just before we do that, okay, you might not be familiar with a lot of the things in front of you. It is just looking at traditionally what you might be used to looking at on a plain chart, but with details that make a massive difference. We won't go into a lot of that right now, but all I wanted to mention is that essentially what we're looking to do, I said we've got a kind of bullish outlook. I mentioned the Fed is looking to cut rates next year. The market is extremely bullish about that. It's been rallying a lot coming into this day. So kind of want to, look at this as a continuation and see if we can actually get some bit more of a move that reflects the recent bullishness, right? Can you see why it's so important we did that analysis before? Because it gave us this kind of environment for us to trade off the back of. Now I'm looking to get long. Now the point is, where do I get long? Where should the execution be? Now I have some areas of interest. Again, won't go into the details in this particular video because obviously best fitted into another video so I can explain it properly. But you just have to take my word for it that there's a certain area that I'm looking at, I'm quite interested in, that sellers might run into some trouble. But what about the finer details? So I know I want to kind of sell somewhere in this region, but where exactly should I be doing it, right? So you'll see at the bottom, I have certain pieces of data here. So I've got the delta. The delta is really straightforward, okay? All it's saying is how many people are selling compared to the people that are buying. Obviously not something you'll be able to see in a traditional retail candlestick chart, but you'll be able to see it inside here, okay? So it's not actually the number of people, it's the number of contracts, units, okay, units. So it could actually be one person selling all 208 units there, or it could be 208 people. It doesn't really matter. The point is there's a large number of units being sold there. And what this is, just a little summary table, just telling me a summary of that information, okay? So what the summary is telling me is that, yeah, there's a lot of people selling in this candle here compared to the number of people buying, okay? So as we head further down, that kind of continues, okay? And the thing is, we can also look at things like ratios, and I won't get into the calculations, I've done this in previous videos, but what this is telling us, this percentage, is the percentage of people that are selling relative to the number of units as a whole sold in that candle. And what we can actually see is, even though a lot of people are short here, relatively speaking, only 9% as a total of the total were short there. And as we get down, that number actually increases as high as 11%. So more and more people, so you see what my point is, and we're going to hit start in a second. I don't want to get too bogged down on this, but it is, details do matter. Let's be honest, a lot of people just kind of hit and hope. We're not here to do that. We're here to dig into some details. 444 units were sold more than were bought in this candle. Now you might think, well, hang on, the selling here was more aggressive because it was 1,182 units that were sold more. So surely that's more aggressive. Well, yes and no. Relatively speaking, it's not. Because as a percentage of the number of units sold in this whole candle, it's actually less. It's 9% here, and it's actually more here, 11%. So very, very aggressive the selling is as we're coming into this space, which is good because it's near the area I want to sell in. So you see this information is, we're all bringing it together. We've got an area of interest. We've got some more order flow information that's kind of hinting that, yeah, perhaps this area of interest might actually be the right place. So, what I want to see, this area, I want to see it really cleared. I want to see these sellers really, not be taken advantage of, but start to get worried, okay? Because we're moving past that area, and therefore they've got to exit out their positions. That's a great time for me to do what? Get into my bullish kind of viewpoint. So we're going to see that. We're going to do it together. Okay, I'm going to hit play. I know I threw a lot at you there, but hopefully that's really at least put you in a mindset going into 2024 that, yeah, hey, this is exciting. I've got a lot of stuff I need to learn, and I've got the whole of 2024 to do it. Okay, so, I think it's actually a good thing that I've done that. So you can see here, I've actually drawn this in, during the live trade that I actually did. I did it in real time. I recognized that I wanted to clear this kind of area. I wanted to clear this area here. And there you can see I've taken a trade. okay? Because can you see I've cleared the area, and you can actually see buyers coming in, okay? I'm not really going to talk too much about the depth of market, but because you can see the same information here in front of you, and you can clearly see, right? You can see the delta starting to really turn positive. Do you remember I said we had consecutive negative delta? We're now really starting to see consecutive positive delta, okay? So the buyers are really starting to get confident now that perhaps this down move early in the morning is coming to an end, right? So what better time for me to get in than right now? So you can actually see I've taken the entry there. You can even see my stop, very sensible stop. We're talking what, about 4 points. Now this is the S&P, doesn't matter, you might trade FX. I mentioned before, GBP USD had a huge move off the back of the FOMC and continues to rally even now. I was just checking it earlier, the pound is very, very strong right now. So you'd just be doing exactly the same thing, but in the pound. I just happen to be doing in equities, okay? And you can see how quickly the market is moving now, and I've got my targets up here. As everyone starts to realize, it dawns on them that the selling that we saw, you know, I've circled it here and we saw it earlier, those sellers are completely lacking any interest. They've already just been burnt. So you can see what better time to take advantage of that than in that certain area. And you see how I identify that. Impossible to do that just using a candlestick, impossible, okay? So we brought it all together. Hopefully you can see that. I'm actually just going to fast forward it so you can see how this trade played out. Okay, so you can see the buyers, as I said before, just starting to get very aggressive. I've hit my first target, which was just slightly above a 1-to-1, and I've still got a couple of contracts left. You can see that here. Just got some P&L on the table. Obviously, psychologically, good to have something on the table and then just let it. Just want to see if we can just take out these highs over here, the pre-sort of overnight session highs, which I believe it does. So we just slightly see it pop up. There you go. Just typical of the market to go and at least test it. What happens afterwards, I don't know. So there you go. You can see I've just taken it out there. Okay, just as we popped above the highs, as you can see. There you go. The final position just got taken. Okay, so total P&L was 1,812.50. Okay, so in a little under around 10 minutes. So, you know, you can see, even though I say 10 minutes, really the amount of work involved was a lot more. There's a lot of thinking that went on before the actual execution. So I said it right at the start, okay, we are done. Obviously, appreciate that you watched the video this far, although I think it was very useful for you to see the slightly sort of different take on the market to, you know, what you might used to be seeing from the retail side. Now, my point is, typically you see people focusing on this, the end result. What they don't want to do is all the work that leads up to it. Unfortunately, that's not sustainable, okay? So this is the right way to do it. Have a fantastic 2024. If I don't see you again, I'm off on holiday actually next week. So this is the last bit of trading I'll be doing this month. Have a wonderful Christmas and New Year for your family. Thanks for watching. Don't forget to subscribe so you get the next videos automatically sent to you. Have a great rest of the year.